Right now, the greater Phoenix housing market feels like it is stuck in this repetitive cycle. The Federal Reserve met again this month and kept the Fed funds rate unchanged for the 12th consecutive month. And on that same day, the CPI showed inflation dropping down to 3.3% on an annual basis, which did help cause mortgage rates to fall back down into the sixes. The Federal Reserve is expected to at least have one more rate cut this year, possibly in September, which might lead to a further drop in mortgage rates, by late summer, and certainly by end of the year. While we hope this is good news for buyers, rates right now are just still a little too high to significantly boost demand. And right now, there is more supply than there was last year. With our sluggish demand, it is a more favorable time to be a buyer, which hasn't been the case, it feels like, probably for about 5 or 6 years. And on paper, negotiations happening in between that entry-level price point, 300 to 500, do look similar to last year, with almost 99% of those homes receiving asking price or more. But what's not reported is the rising percentage and cost of seller incentives needed to provide to those buyers. Buyers at this price point are a little bit more sensitive to their monthly payment than they are the final sales price. Therefore, over half of properties closing in that price range are closing with some sort of seller incentives. Now, buyers over $1 million are less influenced by mortgage rates and concessions and tend to prefer to negotiate the price directly. And right now, price negotiations in June are closing at about 94% of list. So on a $1 million home, that means about a $51,000 negotiated price reduction, which is up from last year. And while we hope, for lower mortgage rates this year, sellers must deal with kind of the current market situation. Supply has been rising all year, but slowed over the past 3 weeks. And this is typical. Supply levels out in the summer before increasing again in the early fall. Homes that have maintenance issues or needing repairs will struggle the most in this environment and may not attract buyers, even with attractive prices. So it's like the well-maintained homes will sell, but those sellers might face longer times on the market and may need to adjust their price expectations. Right now, it's taking about a month for a contract to be signed, and more than half of those listings will likely see at least one price reduction before going under contract. So this is kind of a more balanced market that sellers haven't seen, probably for about 10 years. So having realistic expectations and being patient is going to be crucial for a successful sale this summer. As always, let us know if you got any questions.